Continuing from the previous article, let's delve deeper into the pure players who have staked their entire fortunes on quantum computing. These companies are typical high-risk, high-reward investments, their success or failure directly determined by their technological breakthroughs and the speed of commercialization. For these companies, a core survival metric, even more important than short-term revenue, is their financial runway. How much time they have left to achieve technological and market breakthroughs before running out of cash. Let's first consider IONQ, stock symbol. IONQ, an academic aristocrat with the highest fidelity. IONQ's positioning is clear, to be the Intel Inside of the quantum computing era. It is a pure quantum-as-a-service (QS) provider. QRS, short for Quantum as a Service, is a cloud service model that allows users to access cloud-based quantum computing equipment via the internet to complete complex quantum computing tasks. Rather than selling hardware directly to most customers, IONQ makes its high-performance quantum computers, based on trapped ion technology, accessible to all major cloud platforms, including Amazon's AWS Braket, Microsoft's Azure Quantum, and Google Cloud. This model significantly lowers the barrier to entry for quantum computing users, allowing any developer or researcher to run quantum algorithms in a familiar cloud environment, paying only for what they use. IONQ's core technology is trapped ion. As mentioned earlier, the greatest advantage of this technology lies in the extremely high fidelity and low error rate of its qubits. This means that IONQ systems can produce more reliable results when executing complex quantum algorithms. The company has over 25 years of academic research, with its technological foundation rooted in the pioneering work of its co-founders at the University of Maryland and Duke University. A key story emerges from its first quarter 2025 financial report. Despite quarterly revenue of approximately $7.6 million and a net loss of approximately $32 million, IONQ boasts nearly $700 million in cash and equivalents on its balance sheet. This clearly demonstrates that despite the project's significant capital expenditure, its financial backers are fearless, a crucial advantage. With a quarterly cash burn rate of approximately $36 million, IONQ has nearly 5 years of financial runway. In the cash-burning industry of quantum computing, which requires substantial long-term R&D investment, such a long runway allows the company to focus on technology iteration, strategic acquisitions, and market expansion without worrying about short-term financing pressures. IONQ's core competitive advantage lies in the high fidelity and leading algorithm performance enabled by its ion trap technology. However, the market has already placed extremely high expectations. Its price-to-sales ratio once exceeded 200 times, an extremely expensive valuation that already factored in significant future success and seems certain to win. IONQ is a prime bet on the potential for ion trap technology to become the ultimate industry standard. It has the strongest technological pedigree, the clearest business model, and the most solid financial foundation. However, the primary risk lies in execution. Can the company scale its systems quickly enough, increasing the number of qubits while maintaining high fidelity, to justify its sky-high valuation and establish an insurmountable moat before competitors, particularly Honeywell's Quantinuum, which also uses ion trap technology, catch up? Let's take a look at Rigetti Computing, stock symbol. RGTI, a full-stack integrated superconducting challenger. Rigetti adopts a full-stack integration model. It not only designs its own superconducting quantum chips but also manufactures them in its own wafer fab, Fab 1. It then integrates these chips into complete quantum computer systems and provides computing power to customers through its quantum cloud service platform. This model gives Rigetti full control over the entire technology stack, from underlying hardware to upper-layer software, theoretically enabling faster technology iteration and optimization. Rigetti is betting on superconducting qubit technology. Its core innovation lies in its proprietary multi-chip architecture, which connects smaller quantum chips, chiplets, to build larger quantum processors. This modular approach is considered an effective way to address the low manufacturing yield and scalability issues of single, large chips. Rigetti's financials reveal a race against time. Its revenue in the first quarter of 2025 was only $1.5 million, declining both year-over-year and quarter-over-quarter, while its operating losses reached $21.6 million. This was a red flag, indicating challenges commercializing its existing business. However, the company completed a substantial $350 million equity financing in June 2025, bringing its cash reserves to approximately $575 million. This financing was a timely relief, significantly extending the company's lifeline and buying valuable time for technology development and commercialization. Rigetti's competitive advantage lies in its unique modular chip technology and in-house manufacturing capabilities, which could give it an advantage in building large-scale, scalable superconducting quantum computers. In July 2025, the company announced that its 36-qubit modular system achieved a median 2-qubit gate fidelity of 99.5%, having the error rate, a significant technological milestone. However, similar to IONQ, its valuation remains highly speculative and entirely dependent on future success. Investing in Rigetti is a bet on the scalability of superconducting qubit technology and the ultimate success of its full-stack integrated model. The risks are significant. Continued significant losses, declining revenues, and fierce competition from tech giants like Google and IBM pursuing the same technology. Rigetti's future hinges entirely on the commercial success of its next-generation Anka system and subsequent products. Let's turn our attention to D-Wave Quantum, QBTS, a down-to-earth pragmatist. D-Wave is an outlier and a pioneer in quantum computing. It is the only company in the world to build and commercialize both quantum annealing and gate-based quantum computers, but its core business and revenue source is quantum annealing machines. Its business model includes direct sales of expensive quantum annealing systems to governments and large research institutions, as well as providing quantum computing as a service through its Leap quantum cloud service. D-Wave's core technology is quantum annealing, focusing on solving optimization problems. This enables it to create tangible business value for its customers even though general-purpose quantum computers are still far from mature. For example, Ford Otosan, Ford Motor Company's Turkish subsidiary, is already using D-Wave technology to optimize its vehicle manufacturing scheduling process. D-Wave's first quarter 2025 financial report shocked the market. Its quarterly revenue reached a record $15 million, representing over 500% year-over-year growth, primarily driven by the sale of an Advantage 2 system to the Jülich Supercomputing Center in Germany. More importantly, the company ended the quarter with a record cash position of $304 million, which management claims is sufficient to support profitability. D-Wave boasts unparalleled first-mover advantage and commercialization experience. While other companies are still pursuing higher qubit counts and fidelity in the lab, D-Wave already has 133 commercial and government customers, including Lockheed Martin. Its core competitive advantage lies in its use-today practicality. While its valuation is high, it has the most solid revenue foundation compared to other pure-play players. D-Wave is currently the most commercially successful pure-play quantum computing company. Investing in it is a bet that solving specific problems today is more valuable than waiting for general solutions in the future. The risk is strategic. Will quantum annealing technology ultimately prove to be just a transitional niche market? Once universal quantum computers mature, will D-Wave be disrupted by competitors with broader application scenarios? Finally, let's look at Quantum Computing Incorporated, QUBT, a disruptor in the photonics sector. QUBT is an integrated photonic quantum technology company whose business model revolves around two pillars. First, selling its photonic-based quantum computing hardware that operates at room temperature. Second, establishing its own thin-film lithium niobate, TFLN, photonic chip foundry in Tempe, Arizona, to serve both internal and external customers. QUBT's core selling point is its disruptive photonic quantum technology. If large-scale, high-fidelity room-temperature quantum computing can be successfully achieved, it would fundamentally change the industry's cost structure and deployment model, a potentially significant advantage. QUBT is the earliest stage of these companies. Its revenue in the first quarter of 2025 was a negligible $39,000. The $17 million in net income reported in its financial statements is highly misleading, as it stems entirely from a $23.6 million change in the fair value of a non-cash warrant liability that has nothing to do with the company's operations. Essentially, the company's operating losses widened to $8.3 million from $6.3 million in the same period last year. However, a $93.6 million private placement boosted its cash reserves to $166 million, buying it crucial time to survive. The company's core competency is built entirely on its technological vision. If room temperature optical quantum computing succeeds, it will have significant cost and deployment advantages. Building its own chip fab also provides it with control over its supply chain. Arguably, QUBT is the portfolio's highest risk investment with the greatest potential reward, a quantum lottery ticket. Investing in it is a bet on a radically new paradigm that could upend all existing technology approaches. The risks are enormous. The technology is far from mature, commercial validation is virtually non-existent, and even short sellers and experts have questioned the authenticity of its technological claims and fab. This is a binary bet. Either it explodes or it goes to zero. Okay, that's all for now. We'll continue next time.